$533 million disappeared. No one could explain where it went. And the hedge fund that moved it was registered at an IHOP in Miami. When investigators followed the trail, they found something even stranger, a ChatGPT screenshot. In the court evidence, I'm not making this up. This was happening inside a $22 billion education company. When I first heard about Byju's, I thought I already knew the story. Indian edtech giant. Raised too much money, spent it badly, collapsed. Classic startup failure. Happens all the time. I filed it away, moved on, then I started pulling on one thread. And honestly, I couldn't stop. Look, this isn't a story about a startup that failed. This is a story about a system that was never real to begin with. I'm Grant Hollow, and this is what I found. Let me give you the number first. $22 billion. That was Byju's peak valuation in 2022. Not revenue, not profit. Valuation. $22 billion for an education app. To put that in context, that made it more valuable than Twitter at the time. More valuable than Marriott. More valuable than a 100-year-old institution that employs hundreds of thousands of people. And it started with one guy teaching math to friends for free. Byju Raveendran grew up in a small village in Kerala, India. His parents were school teachers. He wasn't wealthy. He wasn't connected. But he had one thing. He could make complicated things feel simple. He started tutoring friends informally, then strangers. Then he started filling auditoriums. I mean that literally. At his peak, he was filling stadiums. 50,000 people at a time, coming to watch a man teach math. And no one thought that was dangerous. Yet, that's not education, that's influence. I read that and I stopped, because that's not normal. That's not a teacher, that's a phenomenon. And the investors noticed. Between 2015 and 2022, Byju's raised money from Sequoia, from Tiger Global, from the Chan Zuckerberg Initiative, from the Qatar Investment Authority. Smart money, serious money. They weren't betting on a startup. They were betting on a man who could fill stadiums to teach fractions. And for a while, they were right. The question is, what changed? And then something changed. I still don't know when. Or maybe someone did. I just didn't see it. Here's where I made my first mistake. When the story started falling apart in 2022, my initial read was simple. Pandemic boom, overvalued, overspent. They raised money during COVID when every edtech company looked like the future. Then schools reopened. Growth slowed. They couldn't sustain the burn rate. That's the story I told myself. And for a while, it felt complete. But the story didn't break at the valuation. It broke in the accounting layer. And that's when things stopped making sense. Byju's auditor, Deloitte, one of the biggest accounting firms in the world, resigned in 2023. Not filed a qualified opinion, not raised a flag, resigned. They didn't flag it. They walked away, without explaining why. Then 2 board members resigned, then 3 more. Not after a collapse, before the numbers were even clear. Then the audited financial statements for 2021, a full year of accounts, weren't filed until September 2022, 18 months late. I sat with that for a minute. Because late filings happen, resignations happen. But Deloitte doesn't resign from a $22 billion company unless something is seriously wrong. So I kept pulling. And this is where the money stops behaving like money. In 2021, Byju's borrowed $1.2 billion from a group of US lenders. Term loan, standard structure. The money went into a US entity called Byju's Alpha. Then, $533 million of it disappeared. I don't mean it was spent badly. I mean it moved out of Byju's Alpha. And nobody could explain where it went. The lenders sued. They went to Delaware bankruptcy court. They demanded answers. And here's where the story gets strange. The money had been transferred to a hedge fund called Camshaft Capital, run by a 23-year-old with no investment experience. Camshaft Capital's registered address, an IHOP restaurant in Miami's Little Havana neighborhood, registered at an IHOP. The official paperwork said that. No one stopped it in time, no one flagged it, or at least, no one ever explained why it wasn't flagged. I want you to sit with that. $533 million, moved through a hedge fund, registered at a pancake restaurant, by someone who had never managed institutional money in his life. The fund manager, after receiving the money, bought a Ferrari Roma, a Lamborghini Huracan, a Rolls-Royce Wraith. Not investments, spending fast. Then he left the country. But it gets worse. When investigators were building their case, they found something in the evidence that stopped everyone cold. A screenshot from ChatGPT. Someone connected to this case had typed into ChatGPT, "How do I defend against allegations of corporate fraud?" That screenshot ended up in court documents. They weren't asking lawyers, they were asking ChatGPT. That part didn't make sense in court either. That part didn't belong in the file. At this point, I thought I finally understood the full picture. Founder raises billions, moves money offshore through a fake hedge fund, gets caught, fraud. Simple. I almost stopped there. I really did. Then I read one line from the court record. A lender's lawyer, in a sworn declaration, wrote, "The money is someplace the lenders will never find it." And I realized I still hadn't understood the real story. Here's what I missed: the IHOP hedge fund, the ChatGPT screenshot, the missing Ferrari money. Those aren't the story. Those are symptoms. The real story is this: Byju's was valued at $22 billion, and it never had a functioning financial system. Not a broken one, not a weak one. No proper consolidated accounts, no functioning audit process, no internal financial controls that could track where money actually went. Think about what that means. The Chan Zuckerberg Initiative, a philanthropic fund run by one of the wealthiest people in human history, invested in a company that couldn't tell you where its money was. Tiger Global, one of the most sophisticated investment firms on the planet, put money into an organization that filed its annual accounts 18 months late. The Qatar Investment Authority, a sovereign wealth fund, backed an empire built on stadiums and enthusiasm, and apparently not much else underneath. This wasn't a fraud that happened despite the system. This didn't look like failure. It looked like normal. And that's what made it hard to see, because when there are no real controls, when auditors can't get straight answers, when board members resign rather than sign off, money doesn't just disappear. It's designed to disappear. Byju Raveendran left India in late 2023. Before the answers came, he was already gone. He now lives in Dubai. Gated compound, black Cadillac, driver named Hashim. He has given interviews saying he will fill stadiums again. A Delaware judge ordered him to personally pay over $1 billion in damages. Then that judgment was reversed. Not because he was found innocent, but because the court determined the damages had never been properly calculated in the first place. The case is still open. The money is still missing. And 250 million students who used Byju's at its peak are now using a platform that went through insolvency proceedings. Here's what I keep coming back to. The investors weren't stupid. The auditors weren't blind. The lenders weren't careless. They were operating inside a system where the incentives rewarded the story of $22 billion more than they rewarded the truth of what was actually there. And by the time anyone asked the hard questions, the money was already somewhere the lenders would never find it. The last thing I'll say is this: Byju Raveendran could fill stadiums. That part was real. But somewhere between the stadiums and the $22 billion valuation, something else got built. Something that looked like a company, functioned like a company, raised money like a company, but when you looked underneath, there was nothing holding it up. I don't know if it was designed that way, or maybe the system never wanted us to ask. I'm Grant Hollow. The price they hide, the truth we strip.